Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you here this morning after a very short weekend for me. I do hope you had a wonderful weekend out there, and happy Monday to everyone in the house. Before we kickstart the session, let's quickly run through our daily routine just to confirm that we are all on the same page, and then we can kickstart the session. So if you can see my screen, you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. And if you can't, please let us know too as well, and we shall do the necessary adjustments to just make your experience a better one. So I look forward to your feedbacks right in the comment section, and thank you very much as you do so. Let's see what we have here in the comment section while I load up my comment box. Okay, I can see a handful of comments right here. I think I'm loving the energy this morning. From Abbasab, good morning to you. Baobka, good morning. TJ2023, thank you very much. 697, good morning to you. What else do we have here? Let's see. Okay, 88697. TJ 2023, thank you very much. Valia, good morning to you. Ricky King, good morning to you. Thank you very much. Steamroller, trust you are doing very well. Thank you very much for that feedback out there. Malela, good morning to you. My friend Leonardo DV, thank you very much. Who else is here? Hello, Carrie. Good morning to you too. Thank you very much. Who else again do we have? Algavian, thank you. Ricky King, Sunil 201982. Hello, Steven. You guys are just so wonderful this morning, and think I'm very excited to be with you here this morning. Rajas, thank you very much. And think with a handful of comments here, I guess we are all on the same page, and everything is quite good over there. And it's on this note, I welcome you all to yet another promising edition on the XAUUSD Live, your daily dose of financial insight and trading strategies. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as we will be taking another fresh new look at the financial market from both technical and fundamental perspective, using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns only to unravel the potential trajectory for price action for this week. And in fact, I have very insightful and simple trading setups that we will be using to guide our trading decisions for this week. I have a bunch of assets as well that we will be looking at. So I do encourage us all to stay tuned in, grab your favorite beverages, biscuits, popcorn, whatever it is, to keep yourself company as we ride through the financial landscape this morning. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. I do know, of course, being your first time, you will be wondering what this is all about and what is it that we do here on the XAUUSD Live. Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. The session officially kicks at 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And please remember that my aim in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, let's dive right into the business. And before I go into the details, please, today being the first trading day of the week, if you have any assets you want us to look at for this week, be it cryptocurrency, currency assets, commodities, options, equity market, whatever you have out there and you want us to look at for this week, drop them in the comment section and I will try to pick the ones I can pick, include them with the ones I have, and let's have a successful week. So with that being said, we shall be diving right into the business. And as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be affecting the market sentiment on a daily basis. And of course, especially for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the charts, hereby giving us valuable information and timing, of course, to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset I have for this week, okay, I can see some comments here. I see one from Steamroller says that USD. What do you mean by USD? We usually take on assets that include the US dollar. So I'm not sure I understand what you mean there, Steamroller. And we have another one here. Who else is here again? Boletero saying that we should do RXP. Is it RXP or XRP? Or is there any other cryptocurrency called RXP? Please let me know in the comment section. I know of XRP. Please let me know which one you're talking about, which is the Ripple. I look forward to hearing back from you, Boletero. Steamroller says silver. Oh my goodness, silver. Will I be able to take silver, considering the fact that I will be taking XAUUSD? Okay, let's see how that will play out today. Sincerely, let's see how that will play out today. Considering I'm taking XAUUSD. Let's see how that will play out. I will see if we have enough time to do that. All right. Thank you very much. Grizzly, I see your comment, and let's get down to the business. So here, based on the asset I personally have on my watch list, and of course, including the ones I will be including depending on, okay, Grizzly says USDJPY. Good. I have USDJPY already on my list, so we shall be looking at that. Stay tuned in, Grizzly. All right, so based on the asset we have on this for this week, we shall be focusing on economic features from both the United States and the Japanese economic docket. Now for today, we will, because of the absence of any high impactful event, we will be including mid-tier economic features. So in that regard, we should be able to have an insight into what's majority in the market will be. Looking forward to today. Now, today, Monday, February 12th, we have a bunch of speeches from Fed officials, from Bowman to Balkin and Kashkari later today. The first one is coming in about 3 hours from now, while the second one is coming in about 6 hours, and the third one is coming in about 7 to 8 hours from now. The timing of these events are very, very crucial, and I encourage us all to mark out this time when this event is likely going to be happening. As technical traders, we do know that the anticipation of this event usually has a way of influencing the sentiment in the market, which of course would reflect on the chart as price action, hereby giving us structures and patterns to use to strategically position ourselves ahead of this event. Now, one important thing about the speeches is how it has a major influence on the market participants. Remember, these are Fed officials, and of course, whatever they have to say today has considerable influence over the financial market. Their remarks will be providing us insight into the Fed's monetary policy stance, economic outlook, and potential future policy actions. Now, the anticipation of this speech can significantly impact market sentiment as traders and investors will closely analyze their rhetorics for clues about the future policy directions. Remember, since the beginning of the year, everyone was anticipating an interest rate cut by the Federal Reserve as early as the month of March, but unfortunately, that has been thrown out of the window due to the resilient nature of the US economy, as we saw robust data coming in, week out from the United States. And of course, we had the Fed chairman's speech a couple of weeks ago where he emphasized the fact that the inflation in the United States is still very high, and as a result, the higher interest rate is likely going to be extended for another extended period of time. So because of this situation, the market has been a little bit in an uncertain situation, which of course resulted in the chopper scenario we saw during the first half of last week. And gradually during the end of last week, we begin to see the market begin to gain some traction, especially in favor of the US dollar. Now, as we head into the new week, will this momentum continue? Well, let's go into the chart and see how things will be playing out for at least for the first half of the week. So the first asset we will be taking on this morning, as usual, is going to be the USOILSPOT. So I had to load this chart up earlier so that we don't have any delay while we kickstart the session. So on the USOILSPOT, last week was a very tremendous one for us all in this community, as we kept on buying the USOILSPOT rather than the momentum all the way to the upside. And of course, we did talk about various factors that are affecting the psychology in this market behind the scenes. Last week, oil prices experienced a surge driven by heightened concerns over a potential escalation of geopolitical tensions in the Middle East, particularly following the Israeli Prime Minister Netanyahu's rejection of a proposal to halt the conflict in the Palestinian enclave. At the Arab Fiscal Forum in Dubai on Sunday, we had USDJPY, the managing director of the International Monetary Fund, emphasized that the Middle East economy were underperforming in comparison to growth projections. This underperformance was attributed to factors such as oil production cuts and the Israel-Gaza conflict. Now, despite these challenges, USDJPY expressed confidence in the global economic outlook, noting its resilience, and in its regional economic report last month, the IMF revised its GDP growth forecast for the Middle East and North Africa down to 2.9% for the year, falling below previous projections from October. Now, furthermore, last week Friday, we had Baker Hughes release his US oil rig count data, revealing no change in the active rig count, which remains steady at 499. Additionally, the upcoming publications of the OPEC Plus monthly oil market report coming up tomorrow is another event that everyone will definitely be looking forward to. Now, this report will address significant issues impacting the global oil market and provide valuable insight into development within the crude oil market. So, in anticipation of this event, how will market participants prepare for this move, and what will be the psychology behind this price movement? Stay tuned in as we go into the details. So the first thing we will be doing from a technical standpoint here is to have an holistic perspective into what is really going on in this market. And of course, my analysis for this week is going to begin on the 4 hours time frame, as we've talked about how things were on the daily time frame, and this structure on the daily time frame has not really changed since the beginning of the year. So right here on the 4 hours time frame, what I did was to take into consideration the nature of price action in the last 2 to 3 weeks to have an insight into what we may be planning for this week. And one of the things I noticed here is that barrier around the $78 area, which has been consistent with selling pressure in the last couple of weeks. Now, despite some bullish traction that began this year, we saw that as soon as price got into the $78 area, we noticed how buyers found it difficult to break through that particular area, leading into a situation where last month's trading activities ended around the $72 area. And since the new month, that is this month of February, began, we saw a situation where price continued to find higher lows and higher highs as a result of the geopolitical tensions in the Middle East. Now, this situation last week gave us the privilege of capitalizing on some bullish momentum as we rode the momentum all the way into the $78, $77 10-cent area. Now, to emphasize the strength of the buyers since the month of February began, we have a couple of ascending trend line to work with. Look at this one right here and see how it has played a major role in guiding that bullish momentum. Then we have the other one here, which captures all the pivot lows in this current uptrend pattern we have here. Now, from a technical standpoint, you know how we use our trend lines in this community, especially an ascending trend line. We obviously want to be looking out for patterns and structures that support the idea of buying that asset. And as it is right now, the market, the price is still floating above one of these ascending trend line, in fact both of the ascending trend line. And to help us guide our trading decisions for this week, I was able to identify a key level around the $76.50 level. Now, if I zoom in here, you will see how this level had played a major role in determining the direction of price action in the last 2 to 3 weeks in this market. So look at what has been going on here since around the 25th of January. We saw how between the 25th of January and the end of January, let's 31st of January, this area was a very solid demand zone. At every point in time price comes into that area, participants were buying the US All Spot. However, the traction wasn't as strong as we saw during the first day of the month of last day of January stroke the first day of February. We saw how price broke down that structure, and since that moment price has been trading below that particular area. And of course, from a technical standpoint, whenever price breaks down a key structure such as the $76.50 level here, we usually expect that price may come back to retest the structure in an attempt to continue the downtrend continuation. Now, if you look at what happened here on the last trading day of last week, we saw that as soon as price got into the $76.50 level, we begin to see signs that sellers are gradually taking over again from the buyers, as it has done a couple of weeks ago, to incite the idea that we might likely be seeing a bearish move that may break down these ascending trend lines to incite a downtrend continuation. Now, in fact, if we consider what happened throughout the second half of last week, it was more of price action finding selling pressure around this area here, by resulting into what may look like a reversal pattern to incite a downtrend momentum. Now, with the information we gathered here, you would agree with me that we are at a crucial juncture in this market where we want to see how market participants will react to this key level at the $76.50 level since this new week began, to decide what our next line of action will be. Will price break out of the $76.50 level to incite new buying opportunities in this market, or will the selling pressure persist below the structure to incite a scenario that will break down those ascending trend lines? Now, with this information we've gathered here on the 4 hours time frame, it is clear that we are at a crucial juncture. So let's scale down into the 1 hour time frame to see how market participants have been reacting to this key price level at the $76.50 area. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. The new week has started on a strong consolidation phase as we saw price action trading just right around our key level at the $76.50 area, which further gives me a sign that we actually did identify the right key level for this week. And price action, while oscillating around the key level, transition into a range. As you will see, price was confined within the $76.58 level and the $76.26 area to emphasize the prevailing uncertainty since the new week began. Now, with this situation, you know how we do it in this community, especially when we identify a range, which of course tells us that there is an uncertainty in the market. We exercise patience and wait for price action to either break out of the resistance line for an opportunity to buy or break down the support line for an opportunity to sell. Now, with this structure identified this morning, I personally placed my sell stop order below the $76.26 area to capitalize on the breakdown and sell right there, and of course buy stop order above the $76.58 area. And as it is right now, we have the support line of that range broken to the downside to trigger my first sell position for the week. And for those of you who have been following me for a while now, will now understand how our analytical approach works and have taken advantage of this opportunity. Well done to you. Kudos for you for marking out this area and taking advantage of that move. However, for those of us who missed out on this opportunity, it's okay. There's no point banging our heads on the table at this point. The week is still very early, and in fact, this breakdown may not be a true one and could turn out to be a false breakdown. So we are not getting too excited here, as we'll still need some further confirmation that truly this is a true breakdown. So at this point in time, especially for those of us who had missed out on this opportunity, let's see if the market is going to be giving us a second chance to capitalize on this trading opportunity. Now, one thing I would like to emphasize here is the ascending trend line we spotted on the 4 hours time frame, which is right here, slicing through that range we identified earlier. And as it is right now, you would agree with me that in the last 3 hours, price action has been oscillating right around the ascending trend line. Now, there is a tussle between buyers and sellers right now. Is price going to break down the ascending trend line? Is it going to be a through breakdown, or is it going to be a false breakdown that may incite another wave of bullish momentum to the upside? So as it is right now, it makes a lot of sense that we look out for selling opportunities. So with the situation here, especially for those of us who missed out on this opportunity, let's see if the market will come back, retest the structure, and we see signs of buyers finding it difficult to climb above the ascending trend line, and then that will give us very good confidence to continue the downtrend scenario. And of course, this would reflect on the chart as continued selling pressure around this area. Then we can add more sell position and then join the decline to the downside, and of course had more positions at the breakdown of the lowest point price action has been for this week, which is exactly at the $76 area, to maximize the potential of this bearish move. Now, there is a caveat to this bearish setup we have here. Remember that on the 4 hours time frame, we did identify a couple of ascending trend lines, and the other trend line is right here. Now, I do hope you marked out that trend line. If you do, well done. So if price continues to drop, please let's note that if price gets into this ascending trend line, kindly move all your stop losses to secure the current buy sell position while we exercise patience and wait to see how the market will react to that ascending trend line. If buy pressure resumes around the ascending trend line, leading into maybe a reversal pattern like a double bottom structure, head and shoulder or falling wedge, we will be buying the breakout of the neckline to capitalize on the uptrend move, considering the fact that this is still an ascending trend line. However, if price breaks down and retests the ascending trend line, this will be beautiful opportunity to add more sell positions to our existing trade. So this is how we are going to be managing a bearish bias in this particular market. So let's see how the market is going to play out in the next couple of hours. And in fact, I encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decisions for today. Now, in as much as we're looking out for selling opportunities and more selling opportunities at the breakdown of the $76 area, we cannot ignore the potentials of the buyers. Remember, we have been buying these assets since the beginning of this month, as price had consistently found higher highs and higher lows. I did illustrated this to you on the higher time frame. Now, we cannot just ignore the potential that buyers can come in. Now, what are the conditions we want to see here that will make us feel comfortable changing our bias from bearish to bullish? Well, for us to buy this asset, I would like to see price action break out of both the key level at the $76.50 level and that resistant line at the $76.58 area, which happens to be the highest point price action has been for this week. So if a breakout of the structure happens, then we will be in for an opportunity to buy this asset. So let's see how the market will play out from here, and we shall be back here tomorrow to review how well it has done. So this is my simple view on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next assets on our watch list, and use this time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So I can see there are no questions here. So I guess we are all on the same page. And Steamroller, thank you for the compliment. I really appreciate that. Jackie, good morning to you. KXY, good morning to you. Libadade, good morning to you. Glad to have you around with us. It's been a while since I heard from you. Who else is here again? And the videos will appear. Search for this. Okay, all right. Okay, so in the absence on no questions, I want to assume we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list for today. Stay tuned in. All right, so the next asset on our watch list for today is the USDJPY. Remember, we have been monitoring this asset for the last 3 to 4 weeks, and our portfolio on the USDJPY has been phenomenally positive. We remember our first trading for this year scooped in over 800 pips on our first week on this particular asset, though we've had some choppy scenarios since then. And last week we also capitalized on a very strong bullish momentum before bearish pressure began around the 149.500 last week. And for those of us who have been part of this profitable journey, well done and kudos to you. Well, the new week has started. The new week has started on a subdued note as trading has been confined within a narrow range against the Japanese yen against the US dollar, which of course has given us an insight into the level of uncertainty going on since the new week has begun. And of course, the positive risk sentiment is overshadowing, overshadowed by the dovish remark from the Bank of Japan's deputy governor, Shin Uchida, who suggested a cautious approach to tightening even after moving away from the negative interest rate. Now, to quickly give a quick recap on what we have been saying about the Japanese yen in the last couple of weeks. If you were with us a couple of weeks ago, we did talk about the hawkish remark from the Bank of Japan's governor, Ueda, where he did emphasize that the inflationary pressure in the Japanese economy is gradually thinning out and closer to the 2% targets that the Bank of Japan has set. And as a result of that development, he suggested that he hinted at the possibility of Bank of Japan pivoting from their current ultra loose monetary policy as early as the month of March/April. And this, of course, has given a glimmer of hope to buyers of the safe haven Japanese yen. And though following this comment, we saw the Japanese yen gain some positive traction like a couple of weeks ago. And this did not last long, however, due to the resilient US economy, of course, and the expectations of a higher interest rate for an extended period of time from the Federal Reserve. And just last week, we had another dovish remark from the deputy governor of the Bank of Japan, where he emphasized that the interest rate hike would not be as aggressive as majority were expecting. And this isn't what investors want to be hearing at this particular point in time. And following that remark, we saw how the USD gathered momentum against the Japanese yen last week, and thank goodness we did capitalize on that opportunity. Now, as we head into the new week, is this momentum going to continue, or are we likely going to be seeing some profit-taking activities as everyone anticipates the CPI data coming up tomorrow? Now, despite this, expectations of substantial wage increases from major Japanese firms may support stable inflation, potentially prompting the Bank of Japan to adjust its ultra-loose monetary policy settings as early as possible. Meanwhile, on the other side of the pond, the US dollar struggles to attract buyers amidst uncertainty surrounding the Federal Reserve's interest rate cut plan for the year 2024. As a result, the USDJPY may remain range-bound, awaiting key data releases such as the US consumer inflation figures coming up tomorrow. And of course, this crucial data is expected to provide insight into the Fed's rate cut trajectory, influencing the US dollar demand and shaping the short-term direction of these currency assets. Now, with no significant US macroeconomic event today, except for the speeches, I would like us to take note that our decisions today is going to be more of a short-term perspective. Now, with the informations behind the scenes that is affecting the sentiment in the market that we've gathered so far, let's look at things from a technical standpoint and see how we can position ourselves for the next move today. So our first analysis, technical analysis, will start on the daily time frame, where we do want to be having is it daily time frame? I think it's on the 4 hours time frame I started. Okay, daily time frame, yes. So unlike our previous weeks where we have been considering the nature of price action in the last 12 to 13 months, which of course has been bullish, this time around I want to streamline my focus to trading activities since the beginning of this year 2024. And if you look at the structure since the beginning of the year, you will see that price action has been bullish, as you will see price had consistently found higher highs and higher lows, resulting into us connecting the series of higher lows here, giving us an ascending trend line to work with for this week. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that supports the idea of buying the asset. Now, in addition to this trend line are a couple of levels here, which is likely going to be playing a major role this week. And one of them is the major one here, the 149.600, which happens to be my key level for this week. Now, if you look at the structure here, you will see how it has played a major role in determining the direction of price action since the month of September/October of last year. At some point between September and October, you saw how this area was a strong selling niche as buyers were finding it difficult to break through, and not until the later part of the month of October we saw price break out of that structure, where price hit a new high at the 151.950 area. And fast forward to the month of November, we saw price break down that structure, retested it, and since that moment that area had become a strong selling niche, pushing price to the downside. Now, since this new year began, price has gradually approached and come back into that area around the 149.600, and if I zoom into the current structure, you will see that as soon as price tested that area last week Friday, we saw signs of selling pressure resume around that area, just like it did in the month of November. Now, considering the key nature of this level, we will be monitoring how market participants will react to this key level to decide what our next line of action will be for this week. If continued selling pressure persists below that structure, we must see a situation where price could retrace back to either the ascending trend line or the 147.900 area, dovetailing to about 120 pips to catch there before another wave of bullish momentum will happen, or in fact a breakdown of the structure could incite more selling opportunity in this market. However, if price action transitions into an uptrend continuation pattern around here, a breakout of the 149.600 will be all we need to feel confident buying this particular asset. So to guide our trading decisions for at least the first half of this week, we want to see how market participants have been reacting to this area around the key level to determine what our next line of action will be. And to do this, we shall be scaling down into the 1 hour time frame where you will begin to see things more clearly. So right here on the 1 hour time frame, after taking into consideration the nature of price action in the last 1 week, it's quite clear that the market is bullish. So I had this ascending trend line here. As you can see, you saw how it has played a major role in guiding price action to the upside. And since price broke out of this level on the 8th of February, price action has remained above that particular structure. Now, zooming into the nature of trading activity since the new week has begun, you will see that the Japanese yen started the new week on a subdued note, trading within a narrow range against the US dollar. And if we take a closer look at the structure since the new week began, you will see that price action has been confined within the 149.325 and the 149.080 area to emphasize the prevailing uncertainty in this particular market. And of course, you know how we do it in this community, especially when price action falls into a range like this. We do exercise patience and wait for price action to give us a signal in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, considering this factor, there's another thing that I was able to come up with this morning is the fact that the new week started on a bearish note. Price started around the 149.325 and has since found lower highs in this market, but has found barrier around the 149.080. As we can see, sellers have been struggling to break through that particular area. However, at this point, we have a descending trend line after connecting the series of lower highs to guide any selling opportunity in this market. So if price trades below the descending trend line, we shall look out for patterns and structures that support the idea of selling this asset. And coupled with the fact that price has just broken down of this ascending trend line for the first time in the last couple of weeks, for me is a sign that sellers may likely take over the market. But there is a caveat to this bias, as you will see that in the last 4 hours, sellers have been struggling to break through that support line of that range at the 149.080, as you will see here, hereby giving me the consideration that buyers may likely pull a momentum out of this area to incite an uptrend move. Now, with this situation and looking at the nature of this candle right here, which is looking more like an hammer candle, I'm of the opinion that for us to sell the USDJPY today, we will need some beautiful confirmation before doing that. And what are the confirmation we want to be looking out for here? Well, for me, I would like to see price action at least close below the structure. That will be the first time it will be closing below that area. If it does that for this week, retest of structure or retest of the trend line, then I would like to join a decline to the downside. So this is the condition I will be looking out for to sell the USDJPY today. However, in as much as we're looking out for selling opportunities, you know how we do it in this community. We do want to keep our options as open as possible. Now, in this case scenario, what are the chances that buyers can take over this market? Well, we've already been seeing some signs in the last 4 hours as the inability of sellers to break through the 149.080 level in the last 4 hours is a good sign that buyers are strong around this area, but I wouldn't be buying yet, as I would need price to climb and breach this descending trend line for me to consider buying. Though I have a buy stop order sitting above the resistance line here of that range at the 149.325, but I'm considering buying even before the breakout of that structure happens, so we can maximize the potential of that bullish move. Now, what are the conditions we want to see here that will make us buy early enough? Well, I want to see price take out this descending trend line. A breakout of the descending trend line will be a beautiful opportunity that we are getting ready to buy, but I wouldn't be jumping in right away, as I would need price to do a retest of structure to give me confirmation that truly buyers have come to stay. Then if I can see continued buy pressure, reversal patterns like double bottom structure, head and shoulder patterns or falling wedge, mark out the neckline and then buy the breakout of the neckline, then we have a buy stop order above the 149.325. So by the time price will be breaking out of the 149.325, we will be having 2 buy positions running in profit. So this is what I will be looking at to manage my positions today. And like I said earlier, a quick recap: I want to be selling at the breakdown retest of the 149.080 area, as price below that area, of course, is within seller's territory right below the descending trend line. However, if the descending trend line gets breached today, broken to the upside, an area which shares a beautiful confluence with the 149.200, we definitely be looking out for patterns and structures to join an uptrend move from there, and then maximize the potential of the bullish move by adding more positions at the breakout of the 149.325. So this is my simple view on this asset for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off, see if there are any questions before we move on to the next asset on our watch list. Hello 404, good morning to you. Mejan 3292, good morning. Nato, good morning to you. There's a Russian name here. I'm not sure I know how to pronounce that, but good morning to you. I see you right there. And good morning to you, Murdoch. I see you too. All right, so in the absence of no question, let's move right into the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. I don't know how I missed that after the USOILSPOT. I usually take it after the USOILSPOT, but one way I think I skipped that out of ignorance, maybe I would say. All right, so the USTech100 was one of the most profitable assets on our watch list for last week, as we capitalize on that uptrend opportunity, riding the move all the way into the 18,000 area. I think price tested the $18,000 zone, close to the $18,000 zone, as that's Friday's trading session, to give us a new high in this particular market. And once again, congratulations to everyone who did capitalize on this opportunity from last week's trading session. Now, as we head into the new week, what are our chances for this asset? Are we going to continue buying this asset, or are there any signal that profit-taking activities will come in, especially when market participants are anticipating the CPI data, the consumer inflation figures coming into tomorrow. Now, I did mention earlier how tomorrow's crucial data is expected to provide insight into the Fed's rate cut trajectory, which of course will be influencing the US dollar demand. And of course, we know how the NASDAQ is also proportional to the US dollar too, as well. Now, with this situation here, let's quickly run through the daily time frame. Let's have an holistic perspective into what is going on in this market. Well, it's very, very obvious that since the beginning of last year, this asset had been going in leaps and bounds, finding higher highs and higher lows as price action continues to break all boundaries in this particular asset. But my center of focus for this week will begin from the 4 hours time frame, where I was able to identify what looks like a rising wedge, let me put it that way, after taking into consideration the nature of price action since the 25th of January of this year. That's an historical data of about 2 to 3 weeks thereabout, as you will see this couple of trend lines here. And usually when we have such a structure after a strong bullish momentum, it is a sign that the momentum is gradually thinning out, where sellers could come in at any point in time, especially when the support line of that structure is broken and retested to the downside. Now, the question here is, are we going to see price break down the support line, or are we going to be seeing price breakout of the $18,000 area? Now, zooming into this current structure, taking into consideration the nature of price action in the last 1 week, you will see that after price broke out of the 17,800, which was our key level, I think the previous week, and is still going to be serving as a key level right now, as long as price remains above this structure, I'm considering that we will maintain a bullish bias in this market. Now, the highest point here, I just chose the psychological level. That's the $18,000 area. If it gets broken again, I'm of the opinion that price may continue to rise. Now, I just saw this right now. I want to consider this area right around, hold on a second, right around the 17,930, I guess. 17,930. So I want to label a new structure here, 17,930. Now, the reason why I have labeled the structure is simply this. Now, if you look at what happened since on Friday, we saw how market was range bound. Excuse me, please. The weather is giving me stuffy nose here. So we had a range bound trading activity on Friday, which has extended into this morning. And interesting enough, that level also shares a confluence with this ascending trend line right here. Now, this ascending trend line is also serving as the support line of that pennant I told you about earlier. So if price breaks down both the ascending trend line and the 17,930, this will give us good confirmations to join a decline to the downside, and a breakout of the $18,000 area will welcome more buying opportunities. However, as we prepare for today, can we actually take an opportunity even before the structures are broken? Well, let's look at how market participants have been reacting to the structure since the new week began. And to do this, we will scale down into the 1 hour time frame. And of course, right here, hold on a second, the 4 hours time frame, I don't need this to show itself on my 1 hour time frame because I have a structure on the 1 hour time frame already that will help with that area. So let's scale back down to the 1 hour time frame. Now, the new week has begun, and of course we have a couple of ascending trend lines right here. So look at it, and this ascending trend line here captures the nature of price action since the first week of the month of February, and of course you can see price has been bullish, and as long as price remains on the ascending trend line, we of course want to be looking out for patterns and structures that supports the idea of buying. Now zooming into the structure, you will see that since the new week has begun, price action has been confined within the range 17,970 and the 17,920. That level I showed you on the 4 hours time frame, which of course also shares a confluence with the support line of that pennant we identified there. Now, if we are going to be trading this, you know how we use our ranges in this community. Whenever we identify them, we exercise patience and wait for either the breakout of the resistance line to happen to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And as it is right now, I already have a buy position triggered, and right now price is trading around that area. Please, let's ensure we have our stop losses, give enough breathing space for price action to move around. So having your stop losses around that support line area, dovetailing to about 40 to 50 pips thereabout, depending on where your entry point is, makes quite a lot of sense for price action to breathe. Now, if the momentum continues, then like I told you on the 4 hours time frame, a breakout of the $18,000 area will definitely welcome more buy positions. Now, in as much as I consider buying this asset reasonable, we cannot ignore the potentials of sellers. Now, remember, since last week Friday, we have seen how this area has been a selling niche and price is back into the structure. And since price got back here, you will see signs that buyers are finding it difficult to continue the momentum. Let's be hopeful it does. But if it doesn't and selling pressure persists here, I'm of the opinion that we may be seeing a reversal setup here, where the breakdown of the support line of that range will be all we need to join a bearish momentum to the downside. So let's keep this in mind. Let's mark out this level. It's a very simple setup, and let's see how the market will play out in the next 24 hours. I'm sure we shall be back here tomorrow to review how well this asset has done. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds. I'm already out of time, but let's quickly run through this. So 5-10 seconds should be fine, and we'll move on to the final assets on our watch list. Alright, so because of the limited time, and in the absence of no questions, I'll assume that we are all on the same page, and in that regard, moving on to the final asset on our watch list for this week. So the next asset on our watch list for today is the XAUUSD, my favorite assets, popularly known as the gold spot. And from the look of things here, the gold price continues to trade within a narrow range, hovering around the $2,025 area, which will be serving as our key level for the week. I will be sharing with you in detail why that is and how important that structure is for our trading decisions for the week. Just give me a moment, I will be explaining that to you. Now, the prevailing sentiment suggests that the Federal Reserve is likely to maintain higher interest rate for an extended period of time due to the resilient nature of the US economy. Now, this stance has been bolstering the US Treasury bond yields, while the overall positive market sentiment in the equity is also seen as a factor restraining the upward movement of gold prices. And I've mentioned this times without number how the US Treasury bond yield is directly proportional to the US dollar. If the Treasury bond yield rises, the dollar definitely rises. And if this happens, these two assets here are indirectly proportional to the gold. So what that's inversely proportional to the gold. And what that simply means is that when the Treasury bond yield rises, the dollar rises, and then the gold drops. Now, if the US Treasury bond yield drops, the dollar drops, follow suit, while the gold will rise. Now, since this stance of an extended period, higher rate for an extended period of time is in play, it has bolstered the US Treasury bond yield, giving more platform for the dollar, and this may likely incite a bearish turn for the gold prices. Simultaneously, the uncertainty surrounding this timing of potential interest rate adjustment by the Fed may impede the rise of the US dollar, thereby providing support for the gold too as well. So you can see the dilemma the market is right now, and as a result of this, market participants are cautious at this point and are refraining from making any aggressive moves, and will probably await the release of the upcoming US consumer inflation figures scheduled for tomorrow to gain insight into the Fed's future policy decisions. Given this backdrop, we will maintain a prudent approach using the structures we identify on the chart to guide our trading activities for today. Now, to give you a detailed understanding from a technical standpoint, of course, of what is going on in this market, let's quickly run through our daily time frame. And for those of you who have been with me for a while, you will be familiar with the structure, as this structure here has remained the same since the beginning of this year, only the fact that we have been adjusting our key level with the current market dynamics. So right here on the daily time frame, what we did here was to take into consideration the nature of price action since the month of October. That's about 5 to 6 months of historical data, and it's quite clear that the market has been very bullish, as you will see price had consistently found higher lows in that regard. Now, despite the higher lows in this market, you will see that price are finding it difficult to find higher highs, and instead what we are seeing here are lower highs, giving us signs that sellers are trying to push price to the downside. And to further guide our trading decisions, we have our key level for this week situated at a $2,025 area, which interestingly, if you go to as far back as the month of November, you will see how this level has played a major role in determining the direction of price action. Now, of late, in the last 1 week, despite the strong bearish momentum in this market, we saw how that level has been supporting the price of gold. Now, interesting enough, this level here shares a beautiful confluence with that key level with the ascending trend line around that point. Now, well, the question going into the new week is, will buy pressure persist above the $2,025 area just as it has been doing since the beginning of this month to incite an uptrend situation? Or are we going to be seeing price break down the both structures to incite a sell-off in this particular market? Now, with the situation we have here and scaling down into the 4 hours time frame, this is what I was able to come up with here on the 4 hours time frame. Now, on the 4 hours time frame, I consider the last 3 to 4 weeks. And if you look at this, despite the fact that the market has been choppy due to the uncertainty surrounding the timeline of the interest rate cuts from the Fed for this year, 2024, it's clear that buyers have been finding a way to keep the momentum in an ascending manner. And after connecting the series of higher lows, we have a couple of ascending trend lines here, as you will see. Then in addition to this is this demand zone around the 2015 and the 2025 area. Now price is back into this area, though it has broken down that ascending trend line a little bit for signs of selling pressure around this area. Now we are at a very crucial juncture where I do want to see how the market participants are going to be reacting to the 2025 area to decide if we are going to be buying or selling this asset. Personally, you know how we use our key levels. We want to see price above our key level to buy, and then price drop below the key level to sell. Now as it is, price is below the key level, and obviously it makes quite a lot of sense for us to look out for selling opportunities. But we cannot ignore the fact that we are within a strong demand zone which has a buying power for the last couple of weeks. So we need to be very, very careful selling around that point. Now scaling down into the 1 hour time frame and looking at what has been going on here since the beginning of the week. Let me zoom in so we can see things clearly. You will see that the week saw price action confined within a range, though the week started on a bearish note, but price has been confined within the 2027 and the $2022 area. It's a $5 range to emphasize the prevailing uncertainty in this particular market. And the fact that price has been trading around our key level at the $2025 area, for me, is a sign that we have chosen the right key level to guide our trading decisions for the week. And this is the ascending trend line I showed you earlier. As you will see, price is trading below the ascending trend line. So if price can be trading below both the ascending trend line and the key level, it makes quite a lot of sense for us to sell. So I had a sell stop order below the $2022 area, which has been triggered right now. If you capitalize on that move, well done to you. And please, let's give enough breathing space for price action to move around. So having your stop loss right above the $2025 area makes quite a lot of sense. So that's about 35 to 45 pips of stop loss on this one. Now, for those of us who had missed out on this opportunity, well, I will suggest that we exercise patience and wait to see if the market will come back to retest the structure in an attempt to incite a downtrend continuation. So if price comes back into this area, we shall be looking out for signs that buyers are finding it difficult to continue the momentum to the upside, which would reflect on the chart as continued selling pressure or reversal patterns to help us join the downtrend continuation. However, if price climbs above the structure, then we shall be looking at a retest of the 2025 to join the decline to the downside. So what this simply is saying here is that as long as price remains below the 2025 area, we feel comfortable in a sell position. Now, the only condition that will make us buy this asset is to see a confirmation after the breakout of the resistant line of the range at the $2027 area. Now, the reason why I said I will need a confirmation here is because of the fact that sellers are strong around this area. Look at the nature of those candles right there. You'll see sharp rejections. You see sharp rejections here, signs that sellers are very, very strong around that point. Now, for me to consider buying, I would like to see price break above the structure. And if price can break above the structure, price will be back within the buyer's territory, which is right above our ascending trend line, as you will see here, giving us the opportunity to buy. Now, if you are going to be buying, I would like to see a confirmation happen, like a retest of structure. Then we can consider joining that uptrend continuation. So this is the only condition for us to consider buying this particular asset today. And I do hope that I made myself very, very clear. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide guide our trading decisions going forward. So on this note, I want to see if we have any questions whatsoever. If we do, please let me know in the comment section, and I will be attending to them to them, though I'm already out of time here. But let's see what we have before we round off on today's Extreme Speed live session. Thank you very much, guys. All right. So I can see that I see a couple of comments here. Steamroller, sorry about this. Okay. I'll take that as a feedback, Steamroller. All right. I'm so sorry I will not be able to take that silver today. And with that being said, hello, here's LOG89. And quick reminder here, just a quick reminder for us all to be cautious of any referral links or comments in the comment section promise financial guidance or opportunities. These are often scams and can lead to financial loss. Please do not follow or engage with these comments. Extreme Speed is not responsible for any potential scams or fraudulent activities. So please stay clear of all these people in the comment section. Always do your own research and seek out reputable sources for financial guidance. Stay informed and stay safe, guys. All right, so I think it's on this note we have come to the end of today's session, and in fact it has been a wonderful one, as today we were able to attend to 4 assets on our watch list for today, which includes the USOILSPOT, the USTech100, the USDJPY, and of course the XAUUSD, all of which we were able to identify simple trading setups that we will be using to strategically position ourselves for the next move. So please, I hope we all marked out these levels on our chart as illustrated during the course of the session. If you have done so, well done to you. So all we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, please let's ensure to have a well-defined risk management strategy in place so that we can mitigate against risk that goes against our directions. For those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us, the better you get to understand how our analytical approach works and eventually be able to use this information to guide your own independent trading decisions. So on this note, I look forward to you all tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here to review how well these assets have been doing and of course prepare for another promising editions tomorrow. Remember, we are looking forward to this consumer inflation report, which of course will be bringing in some traction into the market, and we do want to be on standby to capitalize on that move. So do not miss out on tomorrow's session. And again, I want to appreciate everyone in the house today. I love the energy this morning. I really appreciate you guys. I enjoyed every single moment and look forward to seeing more of this tomorrow. So on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.